All right, team, welcome back to the Ask Maddie show. We're going to have a great show for you today. There's going to be a theme here. We're probably going to tell you should probably be buying cryptos as we're seeing some major pullbacks in the crypto market, Maddie. And when you see major pullbacks, it is not a time for you to get fearful. It is a time for you to put your money where your mouth is and start buying the assets you care about. We don't want to buy in bullish periods. We want to buy in bearish periods or bearish moments in these bearish corrections. And so that's where the focus of today's show is going to be today, team. But before we get into the content today, become a Crypto Charge member. Click the pinned link down below. It'll take you to our website, cryptocharge.com. You can sign up there using code YouTube. You have access to our website, the coin library, the daily shows, and our community via Discord. Join up there using code YouTube. Maddie, we have a lot of great topics today, but we are seeing some major corrective moves in the market today. What can you tell us about that?
Oh, I love it. You guys should know that like all of my theory, regardless of the fundamentals, because that's something we should always sort out before we get invested in anything, is we should understand the fundamentals of what we're invested in. So fundamentals aside, one of the things I pointed to was the sustainability of a correction. And a lot of people want to see, I want to see it correct, 30% over 2 days, and then we're right back to it, right? And that generally just doesn't lead to like sustained healthy bull runs that have like lots of legs in them. So I think a lot of people have just like this distorted idea of like what a correction should look like, how long a correction can happen, and like what's considered a healthy correction. Really, guys, there's nothing that says that this bull run has to be the same length or have the same size corrections as other runs. I think that a lot of the corrections we're seeing right now is very healthy. Bitcoin could definitely come down quite a bit more and still not have disturbed the macro bullish structure as a whole. So please, guys, if you guys are worried or concerned or the day-to-day price action stresses you out, you're probably not doing any work on higher time frames, meaning we're looking at daily charts, 3-day charts, and weekly charts. When you pull out to the weeklies, it really, really puts things in perspective for you. And you're like, we've had some really unsustained growth over the last, let's say month and a half or whatever, like 6 to 8 week period. Seeing this on a weekly level really looks like it makes a lot of sense. So overall, I'm very happy with the corrections we're getting. Doesn't bother me, of course. I'd like to see my targets hit tomorrow, but I also understand this is how market cycles work, whether we're talking about the stock market, the metal markets, the foreign exchange markets, or anything else. They move in cycles, they have corrections, they rebalance themselves. It's part of the process.
Yes, Maddie. When we're going to get into that today, team, and as time goes on, Dan did a phenomenal breakdown yesterday, Matt, and he was just breaking down every single bull run and the pullbacks we've seen, how many, what the percentage was. And when you look at it from the first bull run, you saw 75, 25% pullbacks, which is a big discrepancy there. But right, as more bull runs go on, you actually see more stops in price on the way up. But what you see is smaller and smaller percentage moves in those pullbacks. So, the second bull run, we saw 45 to 35. The bull run after that, you saw something similar, but more stops. And so, team, we are going to have stops. But as time goes on, Matt, you're going to see smaller and smaller pullbacks, right? And so in these opportunities, Matt, you got to buy. And so I was putting my money where my mouth is. I bought a chunk of API 3. I'm about to buy a chunk of Casper. You were saying something a couple shows ago about how you were able to get on MEXC again. And so I double checked my MEXC. I deposited some stable coins on there. I got it on there easy. So might be doing a big lump sum purchase of Casper on there, so we're going to try that out. But team, right now is the time. If you watch Monday's show, it's just like very straight up, more time goes on, prices are getting more expensive. You got to sideline that capital and wait for pullbacks. We're seeing corrective behavior right now. And we got to put our money where our mouth is, Matt, because we're a crypto channel. If we're not investing in crypto, what are we doing? So, team, let's get into the questions today, though. We got some good ones here. Smith says, what is a better buy right now, Algo or ADA?
Yeah, so as always, let's consult the handy-dandy charts to tell us which is the better buy. And again, remember, guys, we're going to look at a few things here. We want to look at market structure, and then we also want to look at ROI, our return on our investment. Also, when we're looking at those things, we can sometimes look at an opportunity that has a slightly better ROI, but the structural opportunity isn't quite there, meaning that there is imbalances that are left lower behind, which may give us a better risk to reward ratio if we wait for those prices. So let's talk a little bit about that here. We look at these, the two panel I have here. On the left side, we have Algorand on the weekly chart, and then on the right side, we have Cardano on the weekly chart. We actually have a lot of similarities in the chart here, right? You guys can see that kind of have this, double bottom, this big W that occurred, obviously over different capacities. So you have like a triple test here from December through September to kind of create that left one here for Cardano, and then you had the big pop higher here. On Algorand, it was more of a straightforward W. We kind of had just more of the simple testing that happened there, but nonetheless, you guys can see that the structures look relatively similar. You obviously had the follow through off that W on both sides here. So you had the big break over the top in the middle of the W, big break over the top of the middle of the W. You also have in both of these instances a retest of the middle of that W. Now, of course, there's other imbalances lower, but this is what I would say the minimum requirement would be for us to say that we have a relatively rebalanced chart. We're basically taking a previous high and flipping that into a new floor of support. So something that was previously a ceiling of resistance, now a floor of support. Those are the kind of behavior you like to see in the market, right? And again, you offered some pretty decent pullbacks in here. So for Cardano here for Algorand, we had upwards of like a 55% correction. That's pretty aggressive. That's what I like to see. And then for Cardano here, when we look at, from $1.30 or so, we had about a 42% correction. So slightly smaller correction, but nonetheless, you can see that the behaviors are relatively similar. Now, here's really where we start to get into the nitty gritties of what's the better buy. One of the things that I always look for when we're talking about imbalances or areas of interest or liquidity pockets, especially at higher prices where we had kind of like a market topping structure, and then you get this big breakdown without confirming that it's a new ceiling of resistance. When those gaps or those opportunities are still open, I find those to be more attractive and higher probability setups, and probably setups that I'm more keen to jump on or add to. So when I look at some of those areas, so for example, here on Algorand, there's major imbalance up in this pocket up in here. So we're going to call it between 97 cents and $1.26. When we look at where Cardano's at, I would say that the imbalance is up here, but we've already started to clear out the bottom end of that imbalance. Now, does that mean that I think that that's it? Cardano's had his big run and we're not going to see new all-time highs? No, of course. You always can slap the fib on here and say swing high, swing low. Where could I potentially see targets 1, 2, 3 based on our very simple target making using the extensions that are provided from the way that we set up our fibs. But when I see that, but there's two relatively rebalanced charts in here. One of them is actually a little bit closer to that rebalancing zone. And I see that there's a gap that hasn't been filled out. And then I measure from current market, I see, 170% upwards of maybe like a 250% move to the top of that gap. It's a little bit more attractive to me. So even though with Cardano here, right, and we see if it's to the top of this gap from current market, it's about a 76% move. So again, that's not necessarily, that has to be the end all be all game plan for you guys. Swing high, swing low, swing high, swing low. And let's tighten that up so that's actually accurate there. And again, you guys might have slightly different data based on whatever's going on with the exchange, but this is just kind of a general ROI here. But let's say we're able to get an entry from the area of interest we identified here. So 32 cents for Algorand being the top of that value zone. Up into that 1.618 is roughly almost a 13-14x opportunity. Let's say for our Cardano opportunity here, we're going to call from the top of this zone. If we were to get another 80-cent offering here, we would see upwards of maybe like a 5x up into that 1.618 for the $4.87 region. So a variety of things here, right? We talked, and market cap is also another factor we can talk about here, but you guys can go in on CoinMarketCap or even on the side there and look at some of the market capitalizations. We have the gap that's left over on Algorand that has not been filled out. You have a better ROI to both that gap as well as the 1.618. So this is some of the things I consider when I think what's the better buy. But again, vastly different fundamentals, vastly different tokenomics, vastly different market capitalizations. But from a charting perspective, this is kind of how I'd break it down and do that analysis.
BK says, I wonder, however, with countries buying Bitcoin and ETFs, I doubt we will see a 70-80% correction. I'd love to be wrong because I will load up on Bitcoin then. I am not a maxi, by the way. I now hold 0 Bitcoin, but will in the bear market.
Yeah, so I think we've covered this particular topic a few times, and guys, remember, institutions were here last cycle. That's, if you guys can go back, there's, by the way, like time machine things you guys can go look at for like Twitter and a bunch of other like web searches. You can see like what trending keywords during this time. So you guys can go look at like 2021, 2022, and you can see kind of the things that people were talking about. It's the same shit that you're talking about right now of like, because ETFs and institutions are here, we can't have larger corrections. Risk on assets still behave based on what's happening with the economic environment, right? So if we have a very restrictive economic environment, the Fed flips to hiking rates again, they're more restrictive with their mortgage-backed security purchases, we start to see maybe other shifts in geopolitical environments. It doesn't matter if it's in an ETF or not. people who want to sell risk on assets are going to sell risk on assets, right? Same thing with any other stock out there, right? You could say, well, hey, Disney's doing fantastic, right? Look at all the fundamentals of Disney, and they keep growing, and they build new parks, and they keep raising their prices, and this is great for shareholders and great for dividends, right? But what still happens when the risk on environment does not feel comfortable putting more money into risk on? Disney suffers, regardless of how well they're doing as a company or how well their economics are within their own personal portfolio there. So I look at any other digital asset the same way. When people are making a decision because they feel like the economy's in a bad spot between, do I save money to make sure I can feed my family and pay my mortgage and buy more Bitcoin? You can't live in Bitcoin, right? You can't live in a Bitcoin wallet. They're going to make decisions that are going to satiate their immediate needs more, right? And that cycle continues over and over again. So yeah, maybe it doesn't have to be exactly 70 or exactly 80, but like minus 65 is still a really, really deep correction that offers you a good buying opportunity. So what people cling to with this is they want to feel good about buying the top, and they want other people to encourage them to buy the top because, Matt, we're only going to get minus 25% in this next bear market. There's really nothing to suggest that that's going to happen. When you guys see these big periods of economic expansion, they almost always are followed by a proportional correction to the downside, right? So when you see minus 70 or 80%, that's after a 5, 6, 7, 8x explosion. So even after that, that's still making a great higher low. But I'm not going to encourage you guys to buy the top because somebody is suggesting that we might see a slightly lesser correction.
Maddie, I was trying to download this Blockware Solutions market forecast for 2025 because in the market forecast, I just came to my attention when we were talking about corrections and however, they were laying out their bear case, their bull case, and like their neutral case for what's expected. And under their cases, they laid out, I think if my memory serves me correct, their bear case was 150K Bitcoin top. Their neutral or what's supposed to happen is 180K Bitcoin, and then their max one was like 200 or 300 in the bullish case, maybe even 400. They said something ridiculous. But under those reasons, they talked about some big things and big promises that the Trump administration has promised, and some big macro factors as it relates to spot Bitcoin ETFs. I think in their bear case, Maddie, they talked about like, okay, let's say long-term holders of Bitcoin sell out at a huge rate. Let's say there is no strategic Bitcoin reserve, and let's say there is no regulatory clarity. They were saying in their bear case, we will see 150K Bitcoin this bull run. And I wanted to ask you about that because they're putting out their price targets and they're literally putting 3 bullet points under it to say, and they did that following on for their neutral and their super bullish case. Like, if these 3 things happen, we can expect these prices. Do you look at things like that?
Not really. And I think that it also just comes down to what I've seen in previous cycles as well, where like as we get to the more bullish periods, you'll see like on CNBC and all these different hedge fund managers kicking off crazy predictions, 350K by end of the year. That was, by the way, the prediction from last cycle that we were going to hit by the end of the last cycle, 350K Bitcoin. Not even close, right? And I think that what it really comes down to is like they're not out here to actually help you guys pick reasonable price targets, right? Like there is a sense of intentional manipulation, especially through the mainstream media as we get into these bullish prices, to encourage you guys to buy it at those high prices because, of course, Bitcoin's going significantly higher. So look, we can take all of these catalysts, and I would agree that some of these catalysts could project the overall like length of the bull market more, or maybe a little bit higher prices, but I don't think we can say there is a hard factor of any of these things that say this price point is supported exclusively because of these catalysts. They're highly subjective because it's at the end of the day, how do you even quantify how much of a price impact Trump has on, let's say we even start a Bitcoin reserve, right? Like, are they buying Bitcoin on a monthly basis and there's a guaranteed amount? Okay, well, great. Now you're talking about a certain amount of circulating supply being taken out because the US government's going to buy X amount. But like just saying we're starting a Bitcoin reserve, that could mean, well, we're going to start it, but we're only going to buy on strategic dips, right? We're not buying on a regular basis. So you can't count on this very like binary amount of Bitcoin supply being taken out of retail's hands. So, again, would love to see everything that we're talking about, from whether it be regulation or the reserve or CBDCs or whatever it is, but we can't promise that there's going to have that immediate impact, right? Same thing like we talked about with the XRP reserve from Ripple being unlocked. People are like, well, this is going to create sell pressure. Not necessarily, guys, right? Like, you're taking one catalyst and you're saying everything in a global market revolves around this one catalyst. And it's just kind of a narrow view, in my opinion.
And so, Maddie, I finally got it to download on my email. And so here it is. And so, yeah, that bull case was a 400K Bitcoin. And so like this is some modeling that Blockware Solutions is doing. I know there's other modeling out there. I think Dan talked about the other day about Kathy Wood and how she does her modeling and looking at 2023 and or not 2023 2030 and being like, okay, if like half the globe, all half global countries buys Bitcoin and uses it as a strategic reserve and hoards Bitcoin, then we could see a million or $3 million Bitcoin. And so for this, Blockware is just like I said, they have these 3 bullet points under their bear case, their base case, and their bull case, with 400K being their bullish scenario here, Maddie. And as you can see here, they're listing out US adopts strategic Bitcoin reserve while also accumulating more Bitcoin. Fed becomes more dovish. Corporate Bitcoin adoption rate accelerates. So these, I like how you have to say it. It's like 3 prongs. It's like, how do you quantify those things? Like, you're not even really quantifying. You're saying, if they do this, this will happen. This is the price we're going to hit. And that's just silly, team. And that's why, a lot of other people will cover this and be like, oh, I could foresee this. Like, yes, if we put on our very subjective lenses, like, when we chart, we be super subjective sometimes, right? And that's why we try to get different charts, different time frames. But with here, it's like, all right, these 3 things, there you go. And it's like, I don't think so. I don't think that's how anything in this world works. Where you're just like, if these 3 things happen, then we're guaranteed for success there when it comes to an asset class, when it comes to Bitcoin, right, Matt?
Right. Agree. It's just not enough for me to say like there's enough tangible data to say that those things will happen, right? Like they're positive like macro catalysts, but like so what? Let's say the Fed cuts twice next year. That equals a 225K Bitcoin. Under what pretenses? I just think that that's where it gets a little bit silly.
Brennan says, "Isn't XRP a CBDC?"
Oh, that's Brennan. No, it's okay. Hey, listen.
Sorry,
buddy.
Brennan.
So is XRP a CBDC? No. So first of all, do you guys know what a CBDC is? Central Bank for Digital Currency. XRP is a digital asset. So a digital asset in itself cannot be a central bank or a central bank for digital currencies. Like, moreover, guys, like, remember that when you guys talk about assets, like a lot of you guys look at tickers and you're like, oh, these are shares in a company. I own this many shares. Like, that's not how this works. So we have networks. So you have the XRP ledger, XRPL. And then on that network, in order to pay for gas fees, whether we're minting NFTs, establishing trust lines, creating custom tokens, permission networks, whatever it is, you pay for all of those activities utilizing the digital asset XRP on the XRPL. Now, CBDC could implement the network, the XRPL, which would then encompass the use of the digital asset XRP to maybe facilitate payments, manage internal treasuries, variety of different things. But XRP, the digital asset itself, does not constitute a CBDC, right? You're talking about a digital asset, and then you're talking about basically like an entity.
Handsome Teller 55 says, how much of your XRP are you actually going to sell next year? Or this year? You probably meant this year.
Probably this year. Yeah. I mean, we'll see exactly what what the market provides. Like we just talked about, like we don't know how many stops we're going to make along the way. In fact, a longer bull run's better and healthier and may result in lesser correction. So I think that's one thing I want you guys to take away from this. If we get a longer bull run with a larger number of corrections, I think that that's really one of the catalysts that we can say of maybe we get a less deep correction, from a total bear market perspective, if we do a better job stair-stepping our way up through this cycle. So you guys should actually be rooting to some extent for more corrections along the way, because it'll set you up for maybe a slightly lesser correction, in the future. But again, I can't promise that. Very likely, we're still going to see an aggressive bear market that'll offer good opportunities. My goal is to eliminate almost all of my portfolio this cycle. So maybe 20% total of my XRP is going to, I know, right? I'm a bear apparently because I want to sell my assets and make the money that I intended to make when I bought these things in the bear market. So selling most of my XRP. The only other 2 things that I'm keeping out of my entire portfolio is going to be the staking rewards from API 3. So I've left those cook up for a long time. I'll be selling all of my API 3 except for the rewards. I'll just leave those in the protocol. So in the future cycle, great. If they are, worth, let's say $100 or $200 each, fantastic. I'll have that. And again, those will continue to accrue interest because I'll leave those rewards in the protocol. And I'm also keeping 5% of my Casper and leaving that in the staking protocol as well. So those are really the only 3 things I'm keeping. So 20% of my XRP, 5% of my Casper, and then whatever rewards I receive from API 3 are going to keep as long-term holds. I've learned my lesson, and it's not just so much about like I don't think that these assets are going to continue to make higher lows. It's the fact that the corrections offer such a deep discount, even when we're not talking about minus 90%, let's say we're even minus 70%, which would be a big increase from what we've seen from previous corrections in the altcoin market. That still offers me great opportunity to reaccumulate. The other thing we always have to consider, guys, is the emerging trends within a space like DLT, which encompasses a lot, right? Like it's not so much just about payments anymore. That's the big thing we have to remember. It's not just, oh, who's the best payment provider? There's a lot of different solutions out there and a lot of different verticals. And as the AI space evolves, as the DLT space evolves, not only are we going to solve more problems, we're going to create more problems to which other solutions can be born that maybe bring us greater rewards than just always focusing on XRP, our entire, crypto adventure here, right? So I plan on reallocating to a few winners like I have this cycle on higher lows like XRP, but if those higher lows don't offer a good enough risk to reward ratio, I may not jump on that opportunity next cycle. And I want to make sure that I'm freeing up enough capital that I'm able to capitalize on those new emerging trends. So again, not that I want to chase the next new shiny thing, but I have a very good feeling that 3.5, 4 years from now, we're going to have a different set of importance of verticals than we do right now in this day and time. So even when you guys look at last cycle, right, there was a lot of different things that people don't care about as much, NFTs being one of them. And I think that NFTs have a very, very big place in the market still. Really, when it comes to real world asset tokenization, that's when the NFT market really starts to explode. But really, people don't care about it as much anymore. Metaverse, people kind of like are still buying some of the stuff for the metaverse, but they're not nearly as pumped on metaverse as they were last cycle as they are this cycle about AI and AI agents and a variety of other things. So I just want us to be focused and have enough free capital that we can, if we want to, at that time and place, reinvest into some of our cornerstones, our blue chips, but still be able to jump on those emerging trends. So that's really kind of my philosophy behind selling most of my portfolio, freeing up capital.
I love that, Maddie. And just kind of, I know this might sound foolish or whatever because I have no data to back this, but when I do look around, like you do have your VR, we did go through that, the Apple goggles. What was that, last year or 2 years ago?
I think it was 2 years ago.
Yeah, geez, time's flying. And people, that really wasn't a big demand product for Apple now. They're not looking to make another one right now. And so until we see things like that pick up, products like that pick up where we're able to leverage the metaverse, because I don't want to be in the metaverse on my PC or my phone. I think people will eventually want to be locked in as more technology progresses, right, to where it becomes seamless. And then it's like, okay, let me make money because then I could, I can move my hands, and where it comes pretty flawless. And I've seen some pretty crazy technology. I think it was at CES. I saw some pretty crazy technology. It's usually there. They it's very gimmicky with products, with upcoming tech. But some of the things, it's like, wow, we're progressing very fast when it comes to TVs, when it comes to even refrigerators. And so definitely, I think tech needs to emerge for that to really set off. It's like, okay, now we're able to, stack metaverse tokens and then, really profit off of those. So that was just a side note. I was just thinking about that right now. But team, great show today, Maddie. A lot of value, a lot of great charting there. I hope you guys got value today. Don't buy ADA, buy Algo. That wasn't the message of the show.
Yeah, not financial advice, by the way. None of this is financial advice.
I hope that's not what you got. Personally, I would buy Algorand over ADA right now. Just like Maddie said, the risk to reward is better. Short term looks like a better investment. Long term looks like a better investment. You could get into the fundamentals there. But, team, I was telling Maddie before the show, because it really sets me off sometimes when people just can't sit there and really absorb the educational pieces that are taught, right? And Maddie, we were discussing I said something to you about the coin library on our website becoming obsolete to some people. And I know that's not a great selling point for companies but it's honestly because the point of the coin library is for you to go in and look at an asset, get a general idea of what the asset is about, and look at price targets. And, that should help your investment decisions, right? We're not telling you to do anything, but it's to give you maybe some guidelines for what you should be looking at. If you are locked in with the shows on the website, if you're locked in with the shows we do on YouTube, you should be able at some point to be able to make decisions for yourself, right? I remember early on, I would consult Maddie and I'd be like, oh, what about this? And now it's like, I don't look at the coin library. I don't, consult anyone, because now I have the tools. I know what my averages are. I know what my portfolio looks like, and I know how to game plan. And that's really what you should get out of crypto charge, is you should get the tools. I know Maddie says this a lot. You should be able to get the tools to make decisions on your own without even the guidelines, where you can step away from crypto charts and be able to make smart investment decisions, right, Matt? Am I over speaking there, or is that the truth?
Nope, that's exactly right. It doesn't mean that like you guys shouldn't lean on us to help you kind of create that like general plan of where we want to potentially look to unload our final bags. But like, even we're talking about, do I trim here? Is there trim required? Do I need 4 or 5 TPs? A lot of that will be contingent on your personal portfolios, your risk appetite, how much you have invested, what kind of revolving debts you have in your life. There's just a lot of factors that will impact your decision making, because there's some people who have very little revolving debt, and all the money they've used to invest in crypto is money that they've set aside specifically for investments, and it's not interfering with other pieces of their life. But I do know that there are people who have taken out debt or taken out credit to be able to invest in crypto, so they have kind of things working against them, and they have other timelines they have to consider that maybe other people don't. So for some people, based on your personal circumstance, to go, yeah, you should definitely take a trim earlier than TP1. 15 to 20% TP makes a lot of sense for you. For other people who have much bigger risk appetites, maybe you don't have to take the trim, or maybe that trim is a small trim, like a 5% trim. But you guys will start to learn a little bit what that looks like as you guys get involved in the shows, especially when you watch the technical tune-up Fridays, where we go over example after example after example of trim versus final TPs. It really helps you craft a better plan for yourself. So again, our goal is to give you guys the tools to be able to fine tune your own portfolios, but kind of maybe still using our general blueprint as like a starting point to kind of help build a little bit of a plan for yourself when it comes to take profits.
Absolutely, Matt. Team, if you got something valuable here, make sure you leave a like. It's like I'm sitting here, it's like, Gavin, shut up. They need crypto charge, but it's like, be transparent, be honest with the people. If you step on the platform, there's plenty of tools for beginners for you to get in, 3 years you're in there, and then it should be left and right for you in TradingView, in the software, in the community. You should be a leader within our community. That's not to say you hop in the community and then you extract all the value you can, then you leave. It's like at some point it's like you come in as a beginner, you learn as much as you can, then you become a well-educated person, and then you help others with their questions or things that they have, because that's like some better fulfillment within investing than just saying like, oh, let me go get this newsletter, or let me join this community to extract as much value. I think a lot of people are like tight knit within the community, and that's how it should be, and that everyone gets to grow and everyone gets to help one another, and that really feels good. I know, Maddie, you definitely feel that. I feel that as well with people that say, my brother the other day was like, we were just talking about the places we're gonna go eat to when he comes out here, and he was like, oh, dude, I got dinners, like I owe you, like, he said something stupid, and I was like, bro, dude, okay, so what? I got you into crypto, bro. That doesn't mean like you owe me for life. It doesn't. But people feel that way, right? Whoever
Right.
got you into crypto, it's like, oh, like, now I gotta lay down my life for them. It's like, that's not like that. Stop being like that, So, team, got something valuable? Make sure you leave a like. We will see you guys next week. But until next time, team, bye.